Hello and welcome. Thank you everybody for showing up early to our webinar on year-end closing training. We're going to give a minute or two more for people who are just getting in right now. So thank you for your patience. We appreciate it. And I'll be checking in about a minute. All right, we are at the top of the hour. So we will kick this thing off. Again, to those of you who just arrived, thank you for joining us for our webinar today. We're doing some year-end closing training. So let's move on to that next slide, Ilya. All right, so who we got with us today? My name is Nick. I'm the sales manager here at AlphaBOLD, and we have Ilya Budimir, who is our practice manager for our NetSuite practice at AlphaBOLD. And then we also have Andrea Velasco, who is going to be joining us and kind of giving us some insights into the accounting world here. Andrea, would you like to introduce yourself and give us a little bit of information about Synergy KMC?
Yeah, thank you, Nick. My name is Andrea Velasco. I'm an account manager at Synergy KMC. We're an accounting firm located in Santa Monica, California. We provide bookkeeping services, business consulting services, and tax services to local clients here in West LA.
Perfect. Thank you very much. And so we'll move on to this next slide to a little bit about who we are as AlphaBOLD. And so we're a consulting firm in Carlsbad, California, and we were founded back in 2017. We have over 70 employees now who help with a multitude of things, but one of them being NetSuite, which is what you're going to see a lot of today. We have to do some CRM work, some SharePoint stuff, QA, AI, and BI. Up top, you'll see a couple of the people we work with, as well as over to the right, some of our core values, which is accountability, not only internally, but we want to hold ourselves accountable to our customers, which ultimately drives trust. And then we just like to give back to our community. Before we get things really going here, I'd like to launch a couple polls to get a sense of where you guys are as far as closing out the year. So I'm going to launch this first poll here. And what it is with the year end approaching, are you looking for help? If you are, is it going to be before the end of the year, or maybe you need some help a little bit down the line? Or are you just kind of here to check things out, see different processes and things to help you out with closing out the year? So let's go for just a couple more seconds here. We appreciate your responses. All right, gonna close that up. And let's do another one. And this webinar is focused on NetSuite. So I wanted to see, are you guys using NetSuite? If not, are you here to kind of just see what NetSuite can do as far as year-end closing is concerned? Perfect. Great. All right. Thank you guys very much for your votes. It looks like we got a kind of even split here, which is really cool to see. Awesome. All right. So one more poll for right now, and let's see. What is the biggest challenge for you typically during accounting period close? Is it related to inventory, bank reconciliation, financial reporting, or just intercompanies? So it looks like we got a majority of people saying financial reporting is going to be the big pain point, with inventory being a follow-up second. I'll give this 3 more seconds here. 1, 2, and 3. Thank you guys for your votes there. It kind of helps us develop presentations like this to make it more relevant for you guys. So this is where I'm going to hand it off to Ilya if he wants to go, so he can go over the agenda here. But I'm going to be monitoring the back-end side of things here, where any questions do pop up, please feel free to enter them in that questions box. We'll stop periodically to answer those, and if we don't get to them, I'll follow up with you afterwards to make sure we get you some answers there. So Ilya, you want to take it away?
Thank you so much, Chris. Thank you so much, Nick. All right, so just to give you a little background, I usually lead NetSuite implementations, and typically we train clients on accounting, period closing, and year-end closing as well in NetSuite. So today, let's treat this as a training session, as something that we will cover with our customers, with our clients. So we want to share these procedures and tricks and tips with you so that you understand how to properly close books in NetSuite. So the agenda for today, and by the way, I will be assisted by Andrea. They're a partner on some of the implementations. They provide accounting services, and just general help with NetSuite as well. So she'll be definitely helping me with the presentation, and it will be very interactive. So let's get started. So first, I'll let her speak a little bit about best practices before you begin the close, and what activities are performed after the close. And then I will walk you through the period close checklist process. First, we'll talk about different tasks on the checklist, and I will show a series of slides and explain why they're relevant. And then at the end, I will show you a demo in NetSuite where we'll go through all of these steps, and I will show you some reports, and I will show you some screens so that you get that context that will make you understand the process better. And then at the end, we'll stop for questions and answers. All right, so Andrea, a quick question for you. So could you talk a little bit about some of the pre-close and after-close activities before we jump into the close activities?
Yeah, definitely. So pre-close activities are really important. You want to make sure you get through them before you start the close process. You'll want to make sure all your bank statements are reconciled, credit card accounts are reconciled, any bank loans or notes are all reconciled. You'll also want to make sure that you have entered every bill and invoice that you've received or need to issue for the year. You'll want to enter your accruals, record your prepaid accounts and any amortizations and depreciation expenses that you need to record for the year ended. And lastly, you'll want to review your financial reports to make sure that all the expenses and sales are entered into the right categories. Just cross-reference previous years to make sure that nothing is out of the ordinary. After you've reviewed your financials, you'll want to do the close. And once you're done doing the close, you'll want to review your financials again to get an idea of tax planning, and also make sure that you have all your outside services entered so that you can run your 1099 reports, which are due in January.
Thank you so much. So let's proceed with the closing checklist. So the first element on the closing checklist is the locking. So why lock AR and AP? Typically, you would lock accounting periods or transaction modules for a period to prevent users from posting transactions that affect the GL. So locking is part of the period close process. So when you lock the functional module, you will see the little locket icon next to your period financial area. So essentially, what you do first is you see the task, and that's box number 1 on this screen, and you click on that little green icon, and you lock AR, lock AP, and then you lock all GL accounts. And as mentioned, you will see a little locket, like on a number 3 box. In the middle, you will see a little locket, orange lock, which means that that area of GL is locked. Now, if you have a multi-subsidiary environment, a one-world environment, you will need to select individual subs or select them all. And that process, or that locking process, before you can go to the next element on a checklist, needs to be completed fully. So all of the subs need to be locked before you can proceed to the next element. All right, so that one was simple. So the second element on the checklist is a data period mismatch verification. As a step in closing a month or closing the year, some transactions may not be posted in a period matching their transaction date. So according to GAAP, these transactions need to be reviewed and fixed if required, right? If possible. So what you want to do is you want to run this task in the checklist to resolve these transaction date period mismatches. And the system will create a report, or it will flag transactions where the period doesn't match the transaction date. And then you can go and evaluate and review those transactions. So as mentioned, the first box is an example of a bill that would have a date that's different from the posting period. On the box number 2, you will see how to run that task, and that's essentially the last row in the box. You will click on a green icon, and then on the third box here, you can see the transaction that the system has identified, which will have a different transaction date from the period. All right, so let's go to the next screen. So the next element on the checklist is the review of negative or underwater inventory, as we like to call it. Okay. So first, let's talk about what can cause inventory to go underwater. So here I have one example, scenario number 1, where we have no inventory on hand, right? And we create a standalone invoice in the system. And then we create a standalone invoice in the system. As you can see in box number 1, it's 100 units, and maybe we have only 15 units on hand, right? So what happens, our inventory for the item dips. And the reason for that is that standalone invoice, when you enter it for an inventory item, will typically have 4 GL impacting lines. So it would impact revenue, AR, but it will also impact COGS and inventory asset. So the system will not prevent you from entering the invoice, and your inventory may dip. So the second scenario can be a little bit more complicated. And a lot of my customers actually have this scenario. So let's look at this. So initially, for let's say an imaginary SKU ABC, we have inventory on hand that says 28 units for a particular location. And then we enter a sales order in a system for that location with a SKU ABC, and which will consume 28 units of that item. Then we go to the packing step in the sales process. We create an item fulfillment. We select the status packed on the item fulfillment. And then, as you know, NetSuite is a system that many users will use. Maybe someone in a warehouse will do an inventory count and do an adjustment that day. And they won't be careful, and they'll do an inventory adjustment, and the inventory will be reduced by 10 units. At that moment, the inventory dips. Okay, and this is also a very common scenario. Okay, so now let's talk about ways of how we can avoid these problems. Okay, so first, why is it important to avoid it, right? First, the data is less accurate. When you have underwater items in your inventory data is less accurate. Inaccurate inventory can affect other aspects of your system and can potentially skew data in your chart of accounts, reports, and other areas. The second important point is that transactions are more confusing. Purchases that include costing estimates are often confusing for users who are not familiar with the costing workflow for the underwater sales. Trying to sort out transactions associated with underwater sales can be very time consuming and really counterproductive. And then lastly, this will cause audits to fail. So because transactions that include underwater items are also include estimates and adjustments, they're less likely to be well received by auditors. So they don't like to see all those adjustments occurring in your ERP. So there are some pointers as to how we can avoid underwater inventory. So I'll list those for you. Number one, we need to insist on prompt entry of item receipts. We need to make sure that our information is up to date. Okay. So require item receipts to be entered with the date of receipt instead of the entry date, if the receipt does not enter the same date the items are received. Number two, always use sales orders to sell inventory. Always fulfill orders from the sales order if you can. Number three, set fulfill based on commitment preference in the system, in the accounting preferences, to limit to committed. Okay, so everything that's committed can then be fulfilled. So you need to use that functionality in NetSuite for the system to work more accurately. Number four, avoid entering, as before, as mentioned, avoid entering standalone cash sales and invoices. So don't enter those if you can. Standalone transactions have no commitments or checks and balances to prevent you from selling out or going underwater. So all those workflows that exist in NetSuite to protect your system do not work when you enter a standalone invoice or AR. Use the inventory level warning preferences. This preference gives you instant feedback on each transaction as to whether or not you have items in stock. So it's a little alert that pops up. And then lastly, perform physical inventory count on a regular basis to assess whether your inventory data is consistent with the physical count of your stock. Right. So let's go to the next slide. The next element in the, yeah, go ahead.
I just had a quick question coming in here, and it's how often are you reviewing your inventory to make sure it's not negative? And I guess that can go both to you and Andrea here and get your opinion on.
You know what? That's a great question. At least once a month. At least once a month, I would say.
Yeah.
Maybe Andrea knows more, but I would say I would recommend at least once a month.
Yeah, I agree. Definitely once a month, just to make sure that you aren't going underwater in these items. Otherwise, your cost of goods sold can get thrown off if it's not able to pull an actual cost for items that you are taking out of inventory that actually aren't there.
Okay. And I guess I have a follow-up question just from my perspective. Is there a kind of point where you're doing it too often? I mean, is it once a month and you're set, or is there once every 2 weeks? Does it make it that much better?
I mean, if you can do it every day, great. But I know that's not realistic, right?
Right.
So yeah.
Counting inventory can be very time consuming. So ideally you would want to do it once a month. It can take hours and you have to do it when you're not operating. So you'd have to do it after hours so that no one's pulling items while it's business hours. So you'd need, I would say ideally it would be once a month, just so that you're not having to have your employees stay late every 2 weeks.
Okay, perfect. Thank you, guys.
Thank you, Nick. So the next element in the closing checklist is the inventory cost accounting. So that is really a screen that allows you to trigger the system to recalculate all the costs and inventory value after you've entered different transactions, adjusted previous steps in the closing checklist. So it really allows you to trigger the execution of the inventory costing engine in the system that will start valuation or re-kick the valuation for your inventory and the cost. So this is the only way you can manually trigger the cost engine to run and recalculate cost. So follow the steps in this slide. So the first step is to click on Review Inventory Cost Accounting. So I'll show you that later. And then when the process is done, you will see the message, and that's box number 2 here, that says the cost calculation of your inventory within this period has been completed. And then you should see, you should keep on following that number under the items left for cost calculations field. Another thing that you can leverage, another tip for you, is the inventory valuation summary report. If you, and I'll show you that during the demo, if you expand or expose the title of that report, it will show you whether the engine is actually running and recalculated costs. So sometimes you may need to wait for that process to finish before you can review your financial reports. And one way to know whether the process is running is also to reference this report. And I'll show you where to look later. All right. Moving on to the foreign currency balances, or evaluating or reevaluating open foreign currency balances step in a closing checklist. So at the end of each accounting period, you generate currency revaluation transactions for open customers and vendors, vendor transactions, sorry. And this is for foreign currency denominated accounts. Typically, the revaluations are generated as soon as a payment or a credit memo is applied to a AR or AP transaction. In this case, this screen creates revaluations for open transactions for any unrealized gains or losses. The adjustment or the posting is based on the exchange rate on the day the period is closed. So anything that is open will be affected. Okay? So essentially, everything is moved from moved into unrealized gain or loss account. So you start the process with box number 1. You click on Currency Revaluation button, and then the status can be followed in box number 2. And usually you'll see a submission status complete. And then in the results tab, and that's box number 3 here, you will see all the transactions or the revaluations that were generated to move the funds from to your unrealized gain accounts, if there are any differences in the exchange rates. An example here, number 4 box, shows a transaction and a posting. So that's our AP. That's the revaluation, obviously, but that's our AP effect. So credit to AP and debit to unrealized gain or loss account. All right, continuing with the checklist, we come to the consolidated exchange rate step. So let me see here. Yep. So in one world system, in one world NetSuite account, the system updates and recalculates consolidated exchange rates to ensure that consolidated financials in the system are accurate. If you're not familiar with this feature, there are 3 types of consolidated exchange rates. They're current, average, and historical. Depending on what type of account you create, a different type of consolidated exchange rate will apply to this account. As an example, balance sheet accounts use current, consolidated, or general rate type, as we call it, whereas the income accounts use average. So that's that box number 1 that shows you to you the field that I'm talking about. In box number 2, when you run the task in the checklist, the system will present you with a consolidated exchange rate table and rates that it calculates. Note, the rows in the table are not all the same. Rates in this table are either direct or indirect, derived. Right? So the direct rates are set between a child and a parent subsidiary. You can edit these rates and auto-calculate them yourself. And if you look at box number 3, you can see a little calculator that you can click on and adjust, and that will start a process that will recalculate the rates based on the transactions that you've entered. Now, indirect rates are calculated between subsidiaries more than one hierarchical level removed from each other, such as between a parent and a grandchild. Indirect rates are always calculated by the system. You cannot edit them. When the direct rates change, NetSuite updates the indirect rates. So as mentioned, the direct rates can be adjusted if needed, and the indirect rates cannot. All right, so moving on. So continued here, I just wanted to show you how the logic around these consolidated exchange rates. So there are 3 types as mentioned. There's current rate, average rate, and historical. Current rate is, in our example, we have a company subsidiary that's working in UK, or that's operating in UK, and on the top level, the parent has a base currency in US dollars. Okay? So the current rate would translate, let's say, British pounds to US dollars at the end of the posting period, so December 31st. So that will always be used as a current rate. The average rate calculation is a bit more complicated, and it's based on the transaction amounts posted to all accounts with a general rate type of average. That's what I showed you in the previous screen. So every account that has that average, consolidated, or general rate type will be considered, and there's a weighted average that's performed. And it kind of uses all of the transactions that meet the criteria. So transfer from British pounds to US dollar. And it uses the effective rate on that date of transaction. So it takes all of those transaction dates and the rates, and then it calculates the weighted average for those transactions, for those account types. Transactions using those account types. And the same is true for historical. So the weighted average is performed based on all the transactions that are in a system that are applicable. Transfer from British pounds to US dollar. But the only difference is that the accounts that these transactions post to have a general rate type set to historical. All right. So the next step is to run eliminations for any intercompany transactions that you have created in a system. That is if you have a multi-subsidiary environment. So here on image number 2, if you click on save, the process will execute. You can then verify the progress under the status bar or status tab. And I will show you this later in the demo as well. Now, the last slide I will show you relates to period end journals, and some of you may not use this functionality. So to meet statutory requirements of many companies, NetSuite introduced a period end journal posting capabilities. And as you know, NetSuite does a lot of, creates a lot of journal entries that eliminate certain transactions or eliminate the posting of certain transactions. And those transactions are very segmented, and it's very difficult to create a report or present that data to your auditors. So some of the companies require some sort of a combined journal entry to present to the auditing team at the end of the year. So NetSuite provides that now through this automatic creation of the period end journal. So the period end journal can automatically generate when you complete this task, right? And it will generate an income statement closing journal. It moves net income into your retained earnings, and then you would see the consolidation journal as well, which kind of combines all of the transactions that work during the elimination step into one single GA. All right, so I'm going to stop here for a second. Are there any questions for me or for Andrea, based on what you're seeing?
So you've mentioned NetSuite a lot here, and we had one question come through that said, what's unique about NetSuite for year-end closing? I was wondering if you could speak to that right now, or if that's something you're going to get to through the demo.
Well, I would say the consolidation is unique. I find that a lot of systems out there don't do financial consolidation as nicely as NetSuite does, especially in one world environments. So yeah, a lot of enterprise level applications provide that functionality, but not too many small to medium sized business apps such as NetSuite do that very well. So I think that's NetSuite's strength related to this process and the accounting in general.
Okay, gotcha. And then one other question came through is, when do you typically do bank reconciliation?
Andrea, I'll defer that one to you. What is your experience?
Typically tend to do them a week after the month ends. 1 to 2 weeks, I would say, is the max amount of time you should wait before doing the bank reconciliation. That'll give you time to make sure that everything is entered correctly. So yeah, I would say between 1 to 2 weeks after the end of the month.
Perfect, thank you guys.
You're welcome, sir. All right, let me show on NetSuite. So I picked a nice year here, 2018, to close my books. I've been a little bit lazy, procrastinating. So I want to show you first the periods that are closed. So you can see in 2018, I have all of the periods closed up to December 2018. And you can tell by seeing that green check mark under the period close column. And you can also see, as mentioned before, all these little lockets under the AP transaction column, AR transaction column, and GL transactions. So that indicates that those periods are closed. If the period is not closed, you will see open lockets just like on the December 2018 row. So the first thing you do is you click on this little icon. And Nick, you can see my screen, right?
Yes, we can.
Perfect. Just want to make sure. So the first thing you would do, you would obviously, just like explained in the slide deck, you can click on this little green icon to lock AR. And what I will do is I will lock all of my subsidiaries. So I'm going to click on Mark All and then Submit. So now that particular task is completed. I can see on the status that it's closed. So I can move to the next task. I can lock AP. I'm going to click Submit. So that task is completed. Now I will lock the entire GL. And note, the administrators can still make adjustments, but the regular users won't be able to do it. All right, so as soon as I close that task, I see a new task open up, and that's the resolve date period mismatches task. So I can continue working on this task. And the first thing, as mentioned before, that I will do is I will click on resolve date period mismatches button. And then I can see two transactions that are in the system. I can see that there's one in September and there's another one in December. Maybe my September transaction I won't be able to modify, or maybe I'll be able to adjust it. It really depends. But you can edit those transactions right here on the screen and make adjustments if appropriate. Okay. And then let me show you what that looks like. So I'm just going to open it here in the new tab. And here we have a date in December, and then the posting period in January 2019. So I can move that to 2018. And I'll ignore this credit limit message. All right. And then what you would typically do, you would go back and you would mark this task as completed. So as soon as that task is done, you go to the next task, and it's reviewing the negative inventory. So if I click on this icon, I can start the process just like demonstrated earlier by clicking on this review negative inventory button. Now I can actually, I'm going to see all the information, right? And I can do some sorting by location and then fix these items one by one. Another thing that you can do, and not during this period close, right? But during the month, right? Your accountant, your warehouse manager can go into the particular reporter screen. It's under the inventory tab here, and it's called Review Negative Inventory Report. So you're going to open that up. And you would pick your locations, and then based on these locations, you'll review the items that have negative inventory. One thing that I wanted to show you is a good report to review is the inventory valuation report, because you will see in a sequence all of the transactions that affected that item, and then you will be able to sort out what's going on and when the inventory dipped. So this inventory valuation report is very important. Okay, always use that. And there are some other reports that you can create. NetSuite has many capable reporting tools that can allow you to build really detailed reports and alerts. All right, so let's assume that everything got reviewed and everything got fixed. I can go back to the period close and I can mark this task as complete. Now remember that engine. So I made adjustments, I created some transactions, adjusted certain things. Now I can trigger the inventory cost engine to revalue my inventory and adjust the COGS if needed. So I'll go to this step here and I will trigger my engine to run. So obviously I don't have too many transactions, so for me it's easy. But you would wait a little bit for this to finish. Depending on how many items you have, it may take a while to finish this step. Now, once you're done, you would mark this as completed. And at any point, guys, you can make notes, right? You can add notes and keep track of your activities in the notes section. So I marked this task as completed, and let me see if I did that actually. There you go. So depending on your system configuration, you may have this this step here. It's called Review Custom GL Plugin Executions. So if you've enabled that functionality, NetSuite has custom GL plugins that generate custom GL postings on different transactions. And what you may need to do is extract the report of those custom GL postings and maybe provide that to your auditors. So you may want to run that step to get any custom GL postings, if any. If you haven't enabled that functionality, that step will not show on your screen. Because I enabled it, I have it. So you can run that and see I closed it again, so now it's showing an error, right? But if you don't enable it, then that step will not show in your checklist. So I'm just going to click on Mark Task Completed because it's not relevant. If you run a new feature in NetSuite called cross charges or intercompany framework, you will have this special step in your flow. We didn't talk about it today, but essentially what it would do, it would present you with cross charges that you will review, and then they will directly post into NetSuite. So these cross charges are any transactional activity occurring between two subsidiaries within your environment. So here I don't have any, so I'm going to mark this task as completed. And now we're getting to what we've discussed, to revalue open foreign currency balances. So any open transactions in foreign currencies will be caught in this step, and currency revaluations will be created for those open transactions, open AP and AR in foreign currencies. So I'm going to click on currency revaluation button. I'm going to run it for all the relevant accounts, and I'm going to click Save. And these are the transactions that are created by the system. And if I open one of them, that's what they look like. So we have a little loss here. That's what I showed you in the previous slide. So if I click on Mark Task Complete, we're good. And the next step is in this list is balancing of transactions by segment, but only if you enable that functionality. So NetSuite has segment balancing functionality that companies who use fund accounting and need reports or need a special balancing based on project or funds, etc., you could use this functionality, and then it will balance AR postings, AP postings, bank postings by a project or by a segment that you define. So I'm not going to talk about this. I'm just going to complete this step, as this can be a section or a webinar on its own. So I'm going to mark this one as complete. And then the next step is calculation of consolidated exchange rates. So we've created transactions. Now we just need to trigger this process to be able to recalculate our consolidated exchange rates for consolidation purposes. So I'm going to click on this. And this will generate, so I'll click calculate, and this will make adjustments. And I can manually calculate rows for the direct lines, as you recall in our previous discussion. And then the current average and historical rates will be computed, and those are used on your consolidated financial reports. So I will mark this as completed. Now, if you have any intercompany transactions, they can be eliminated in this step if you have any eliminations. So I'm going to go here, and I'm going to run intercompany elimination process. So this can be a little bit confusing. So all you have to do here is you need to hit save button. That's all you need to do. And you can use the filters if you need to, right? But that's all you have to do, and that will trigger the process. And you will wait until it's completed. So I'm lucky I don't have too many. So for me, it's easy. If I go to the results, I'm going to see the transactions in there. So there are elimination journals that were generated, and I can open up those elimination journals. I don't know what's going on here. Okay, this has been deleted. All right, so let me go back. There you go. So the journal shows what transactions have been eliminated and why, and then you can see that information in the journal that's generated. I'll open one for you. So there's a lot of detail that's provided. So you can go back, and you can mark this task completed. All right, and this is the last step that actually creates all your consolidated journal entries and that income statement. So I'm going to run this. And I've already run this, and I don't want to take up too much of your time, so I'm going to show you the results. So here's the historical balances journal entry. And you can see the detail. So it's a consolidated journal entry, and you can see the detail here. So for every month, you can see the postings. And then I will show you the income statement closing file as well. And you can evaluate the details as well. So every journal entry is in there. All right, so I'm going to mark this task as complete because we're running out of time, and I'm going to close my period. And that's it. So I click on close period, and my year is closed. Okay. And if I go back to the Manage Accounting Period screen, and if I open FY 2018, I will see that December is closed and the entire year is closed as well. Okay, so that was my presentation. Go back to the slide deck. Are there any questions?
It looks like there are no questions. You must have done a fantastic job showcasing everything. So, I mean, honestly, it looked like NetSuite just made everything very simple. Just a quick, easy checklist. So I really like what I saw, Andrea. I don't know, did we miss anything, or is there anything you'd like to add as far as all this is concerned?
Yeah, or maybe you want to share something with the audience. You know, are there any gotchas or any tips that you may offer, Andrea?
Inventory is a big area where things can go wrong if you let them. So just staying on top of doing your inventory counts and reviewing your inventory and doing the month close so that it shows you if you have any negative inventory that you may be unaware of is really important. So I would, highly suggest making sure you're doing these month closes every month to avoid anything. If you miss one, sometimes it's harder to go back and make any changes for any errors that may have occurred.
Yeah. And we did have another question come through actually right now. It says, if you manually calculate the exchange rates, will it change once you go through the close?
Nick, can you repeat that one more time? Sorry.
Yeah.
I didn't quite understand. So
if
you manually calculate, can you go to the close? Go ahead.
If you manually calculate the exchange rates, will it change once you go through the close?
It will if you click on calculate. So there is, so on the line level of that screen, you can, I believe you can avoid recalculating everything on a fly. Like you can adjust it within that screen. So if you can calculate it across all accounts, and then if you want to manually calculate it, you can go into the special screen where you can manually adjust the rates, and then you can mark that task on the closing list as completed, and that will not recalculate your manually entered rates, I believe. I don't know if that answers your user's question.
I hope it does. If not, I'm sure another question will come through.
Yeah.
As of right now, I don't see any other questions coming through. Was there anything else that you or Andrea wanted to bring up as far as here in closing?
No, not really. I just want to mention that so let me go to the next slide. Maybe you'll talk about this, but these are addresses here, AlphaBOLD and Synergy. We work as partners, so we help each other out with different implementations. Synergy gives accounting advice, helps with tax planning, etc., and we do implementations. We understand accounting, but our focus is mainly on ERP solutions, integrated ERP solutions, including NetSuite. So I just wanted to mention that. You can reach out to us for any help. And then I'll kick you back to you, Nick.
Yeah, and real quick, just for everybody on here, if I wanted to launch one more poll after seeing everything within NetSuite, whether you're using it or not, what are your thoughts as far as NetSuite and its functionality for the accounting closing periods? Love to hear your feedback on that, and maybe we can address certain issues. If there's someone doesn't like it, we can meet up with you and see how we can make it better and work for you. So I'm gonna leave it open just for a little bit longer. It looks like everyone seems to be pretty happy with it, so that's good. Majority of people saying good. Second runner-up is great. And it looks like we got a couple neutral and unsatisfactory, but the majority is positive, which is awesome. So I'm going to close that up. All right. So yeah, thank you guys for your feedback on that. As far as next steps are concerned, if you were here to just learn, great. Hopefully you got something out of it. If you didn't quite learn everything that you were hoping to from here, please reach out to us. We would love to have a discussion with you and make sure we clear anything up. If you want to look further into NetSuite, if you're not already using it, we'd love to talk to you. If you're using NetSuite and you got projects coming up, we'd love to talk to you. We like to talk. How about that?
Absolutely.
So yeah, if you want to talk, we are here. Outside that, we will be following up with you just with the webinar recording so you can review it at another time. On the slide, you see our contact information, so you'll have that too. But yeah, thank you for spending your time with us today, and thank you for your feedback for all the polls. Thank you for the questions, and we'll be in touch. Have a great day, you guys.
Thank you so much. Thank you, Andrea, for helping us.
Yes, we appreciate that as well. Thank you.
Bye, everybody.